What's up everyone, this is Jay with Enhanced Trades, and today in this video we're going to be talking about how you can use the Enhanced Trades algo to get better performance in the short-term time frames. Obviously we know that when you're trading the short-term time frames that different rules do apply, and I'm just going to be talking about those quick rules so that you guys when you're trading can have a better performance. So let's just jump right into it. So right now I have a total of 8 rules when trading the futures market in the short-term time frames, and these rules will be posted right below in the description. That way you guys can always read up on them anytime, or just copy over to your Word doc or your sticky notes, whatever you want to do, right? So let me start talking about it one by one. First rule is we trade in the morning sessions only. Why do we trade in the morning sessions? That's where the volume is. We want to be where the volume's at. We don't want to be trading at times when there's no volume and then one big player could come in at any point and just pump up the market, right? Or just pump it down. Who knows? You might just get taken out really quickly. By being in the morning session, you have a lot of volume, you have a lot of buyers and sellers fighting, but you can understand where that trend is going. And that brings us to our second point, right? It's always stick with the trend. I don't know why people fight it. Like, understand how to read the trend. It's very important, right? So let me just show you a quick example. So, right, in this case, let me just zoom out a little bit. We can understand that our trend, even in the overnight session, was to the upside, and we are continuing that. We're getting small pullbacks, we're continuing that, right? Same thing. It's been happening for hours. It's a big uptrend, and we're going to follow that. So we're not going to be looking or being scared that, oh, it might reverse on us now. It's like, no, we're looking for the uptrend moves. Stick with the trend. And if you want to understand short-term trends, it's just understanding, okay, we had a pullback, but we never broke below. We're still making higher highs. And always pay attention to that. If you're making higher highs, that means you're in a nice uptrend. Here, we broke through it. So it would have been our like pivot point area because it pulled back right before. Higher high, higher high, higher high, right? Always pay attention to that. Third rule, don't trade around key support and resistance points, right? So I know we all draw out our support and resistance levels. You guys can see it every day on my live streams when I'm trading the futures for both the NQ and the ES, but when you know there's a key level and we're getting an alert right there, that means we might have got that little push to have that pre-momentum move. We're getting that indication, but it might reverse. So if there's key support and resistance points, you want to avoid getting into a trade and getting stuck in and then having it reverse on you, right? Third rule, this is just an fourth rule, right? Always trade with your order one tick above the candle alert, right? So if we look here, right, even though this is what in the overnight session, okay, you know what, let me just in the morning session, right here. So for this candle, our automatic take profit lines would have popped up right here. So our alert price would have been 32.86, and you would have seen that on Discord or your alert page if you set it up. But we would always place it one tick above. Why do we place it one tick above? When we back tested it, as well as like live trading as well, right, for a long time, that one tick saves you so many times, because sometimes what happens is the market likes to create double tops, as we know. To avoid those double tops and just getting faked out, we have that one tick, because if it can break above the alert, it'll have a nice move. Because the whole point of these alerts is to get you into a trade before that big momentum move comes in. So when you have that one tick, it saves you from those double tops, but then you're still in the trade to catch those big moves. And that's exactly what happened in this case, right? So if we measure this move out, what happened? 7.25 points minus that one tick, 7 points. Would you be happy with 7 points? I know you would. 7 points is a good amount in the ES. And if you're trading the NQ in the same move, 7 points is still good on the NQ as well, but 10 points is probably better. But you had a nice move on the NQ as well. Next, rule number 5, right? Rule number 5 is have the order open only for the next 2 candles, or else cancel and then move on till the next alert. Why is that? If the candle didn't break above, if the next 2 candles after the alert, right? It was, you know, on the charts, it'll show you the buy. You'll see these. If it didn't cross it in the next 2, cancel it, because from our testing, what we've seen and our live trading, right, that you guys see me do every day, anytime it doesn't cross in the next 2 candles, we don't want to be in it, because that means that momentum isn't there, that it's not continuing. We're playing on momentum plays and we don't want to not have momentum. Like, it makes no sense, right? If it's weakening, that means, look, and this is a perfect case, right? Pumped up indication, okay, we might have a big momentum move, but guess what? We saved ourselves because we didn't just enter because, oh, we saw a buy, so let's just buy, right? No, that's not what we do. We place that order 1 tick above. That saves us so much. That 1 tick, you're not losing much. So if you're going to be greedy over 1 tick, then I think you might need to find something else, because like, this is for you to build your wealth, not just say, oh, let me just follow something blindly, right? So first, you'd have your 1 tick above, and then come, if it didn't cross the next 2 candles like it didn't here, cancel that order. What are you losing? You're saving yourself. So those are mandatory rules. Do that in the short-term time frames. He's like, it would have saved you. Because say if you bought it, just because you bought it, you could have reversed, you could have just lost a good amount. And that brings us to our next rule, right? Where did my document go? Okay, right here. If an alert came, well, it's not our next rule, but don't trade candles that are bigger than 7 points, right? In this case, if we measure it out, this is 11.75 points. We know ES, whenever it moves up, like a big pump in a matter of 5 minutes, or like a 1 minute candle, that it's gonna push back down because the sellers are gonna step in. They want to correct that move, and then the buyers will step in again, like they did here, right? It went, sellers stepped in hard, pushed it right back down, and then buyers finally stepped in and then started pushing it forward for the day. But whenever it's over 8 points, don't take the trade, because 1, you're gonna have a higher drawdown. Like, you're gonna have to place a stop loss that's very high, so it's not good for you, because I know you guys are trying to grow your account, so I'm watching out for you guys. And by following that rule, if the candle is bigger than 8 points, don't trade it. It's not worth it, because the way you're gonna have to place your stop in this case, right? Let's see, your stop from here to here, you would have had to place, if you're following the step level 2 stop loss, it's 16.5 points. But if you're doing level 1, that's still 12.75 points. That's too big of a stop to risk. It's not worth our time, right? We're trying to get in on those big plays, but we can avoid these and not have that risk on our hands. And then if an alert ever comes up on a doji candle, be very careful, guys. We all know what doji candles are, right? Doji candles are essentially candles that are show you an unbiased opinion on how the market wants to move forward. It means that buyers are in control and so are sellers. That's why they can't make a proper candle to decide if they want to push high or push down. And that's when uncertainty kicks in. So for example, let me just remove this right here, doji candle. If I saw that personally, and if it was between lunch hour, right, 12 to 1, I would have been like, no, I don't even want to look at this, right? So avoid those plays. You can still get in on doji candles if you want to. It just matters about how the market's performing at that moment. And what I mean by that is the market continuously pushing up. Is there some good news in the market? And do we have that potential to push that high today, right? So always be careful. And regardless, in this case, most times the doji candles, if we get that alert, and if it doesn't cross in the next two candles, we would have canceled it anyway. It saved us. Yeah, it might have went up a little bit here, but then it could have tanked, right? That's why those next two candles identify, is there a pure momentum move coming or not? And if you guys have been watching my live streams, you know how much I hate choppy markets. And if you're trading the ES in choppy markets, especially in the short-term time frames, you are gonna get, your account's just gonna get blown up, right? Choppy markets ruin a lot of trades for a lot of traders. So if you identify a choppy market, don't get into any alert, right? There's no way of just like identifying the chop perfectly. I know that, but we can get a good understanding of, okay, things have been pushing higher, but then things have been pushing lower. It's creating a little range, right? Remember that. If things are pushing higher and lower, that's not a good sign. That's an indication of, okay, markets are getting choppy. Another indication of choppy markets is just, we see the candles just bouncing back and forth and high wick candles, right? So right here is a nice example of a nice little chop. We had that big move, right, since the overnight session all the way up. So, you know, we have to take a breather. Things have to get choppy for a little bit. That's just the way markets work. And then they break out again, right? But in this case, our chop was, let's see, can I get a, where's this? Things got choppy right here. So in this square that we see, that's all chop. That's because we notice, hey, there's a big move, some chop might be coming for us. And again, this is past the morning session, you know, that's when volume dies off. And when volume dies off, you know what happens? Things get a bit weak. You don't know what's gonna happen. It's a bit more risky. And again, we see high wick candles happening. Okay, it's pushing down. Okay, no, pushing up, pushing down, pushing up, pushing down, pushing up, back and forth, back and forth, back and forth. Once we see a little bit of that happening, it's a good indication of choppy markets starting to come for a little while, right? So we started getting those wicks on both sides of the candles, and then it started to continue here. We tried to make a little push, but then boom, just started coming down. And then here we knew choppy, 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 choppy. So those were the 8 rules, guys. I'm going to leave that in the description below. And if you guys ever have questions, just leave me a message in the Discord. We can do it in a random chat or just DM me. I'm more than happy to help. I hope this video helped. Leave this like button. If you're new, subscribe. I hope you understood it, especially if you were new, because you would have to have the algo to understand it. But yeah, it's that simple. This is an easy way. These rules are an easy way to secure yourself some profits in the mornings and not have to be glued to your screen or just get false alerts, right? Because again, when you're trading the algo on the higher time frames, you know you can trust it, but in the shorter time frames, you can trust it, but you just have to apply a couple more rules. And that's exactly what we do, especially with the futures market. We all know every single market's different. Bitcoin acts differently. Regular stocks act differently. Futures like ES and NQ obviously act differently. So that's why we have to keep that in mind, and that's why these rules are in place. And these rules have been in place because we back tested them and we've seen the results from them. Okay, so I hope you liked the video. Have a wonderful day.